Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. What is going on with gold, silver, platinum, and palladium all in the red, dropping drastic numbers? Silver's down $1.17 to $16.58. Gold down to $1,500 range again at $1,584, down $59.80. Platinum $858, down $43. And palladium down $314 to $2,440. This article is from Kitco talking about why gold and silver prices are seeing pressure amid global equities meltdown. So there's definitely stuff going on that's affecting the prices. It's not like they're just dropping from sheer price. There's actual events happening in the economy that we're going to talk about. It looks like today we're going to be talking about the equity markets. Excuse me. So before we start, make sure to smash that like button. Make sure you subscribe if you're new, because I do post daily videos. But with that said, let's jump into today's video. Gold and silver prices are posting solid losses in early U.S. futures trading Friday. The safe haven metal bulls are confounded. Their markets cannot match or catch a bid amid the very keen risk aversion in the marketplace that sees world stock and financial markets in turmoil. There's an old saying in trading markets that when the times get really dire and anxiety is high, you don't sell what you want, you sell what you can. Such is likely part of the reason safe haven gold sees downside prices pressure this week. Also remember that gold's price is mostly driven by consumer demand. China is the leading gold consumer, and the coronavirus outbreak's negative impact on the Chinese economy is most certainly going to crimp Chinese citizens' purchases of gold and silver. So they're saying the coronavirus, also called COVID-19, is crimping the biggest consumer of gold, and gold's main price runs off of consumer demand. So the coronavirus is coming full circle and definitely affecting economic surplus or imported and exported goods, especially in the precious metal sector. So, silver is weak and getting hit especially hard on ideas that both commercials and consumer demand for the metal will be dented by slowing world economic growth. Still, the gold bulls remain in firm near-term technical control amid price uptrend in place on the daily bar chart. And prices are still not that far below Monday's 7-year high. April gold futures were last down $19 an ounce at $1,623. March COMEX silver prices hit a 9-week low overnight and were last down 62 cents at $17.03 an ounce. Global stock markets were solidly lower again Friday, the last trading day of the month, as the coronavirus outbreak continues to grip the global marketplace and is causing keen trader and investor anxiety. So this isn't just affecting precious metals. This is affecting stock markets. This is affecting everything across the board. Here are just a few of the economic ramifications of the coronavirus outbreak according to reports. So we're about to get some facts right here. China ports are seeing container ships calls down 30% from last year. Oil shipments to China from the Middle East are down 88% from last February's deliveries. 88%. The International Energy Agency forecasts oil demand to fall by 435,000 barrels a day in the first quarter, to contraction in 10 years. U.S. stock indexes are pointed towards sharply lower openings and at multi-month lows when the New York day session begins. So everything's down right now. Do not be surprised if, as soon as today, the major central banks of the world issue a joint statement declaring they stand ready to stimulate economies by easing their monetary policies. If the coronavirus scare continues to roil the markets, and that's definitely true, something is going to take place, because this usually blows over by now, but since it's still going on, things are getting severe. How the marketplace would interpret such a declaration is unclear. It could make market participants even more panicky, which is true. With such a large statement, even though it would be helping the economy, it could make people realize how severe things really are and make it even more panicky. In return, safe haven metals like gold and silver could be rewarded from it. So the yield On the benchmark, U.S. Treasury 10-year note has dropped to a record low of 1.17%. The 10-year German bond yield hit a 5-month low of 0.61% or 0.61%. So what U.S. Treasury market is telling traders and investors this week is that serious economic damage will be inflicted by the coronavirus, both at home and abroad, including the possibility of a U.S. recession on the horizon. Europe's economy stand to be hurt even worse by the outbreak. So, talking about recession's been looming around the corner regardless of the coronavirus. Regardless of what's happening. And that's just because hyperinflation due to our $24 trillion in debt and how worthless and how impregnated the dollar's been. But this is definitely going to push things to a new level. NYMEX crude oil prices are solidly lower, with a 14-month low and trading around $45.50 a barrel in early trading Friday. The U.S. dollar index is trading solidly lower or solidly down again today as currency trader focus for the coronavirus, prompting the Federal Reserve to lower interest rates as soon as March. President Donald Trump also bashed the Fed again this week, implied he wants a weaker greenback. So President Trump once again is saying how he thinks the dollar index is too high and he wants a weaker dollar. The U.S. dollar, like gold, is a safe haven asset, but both assets are feeling pressured late this week on the concerns associated with the slowing economic growth, which is from the coronavirus. There's an old saying that due to an extremely anxious marketplace, traders don't sell what they want, they sell what they can. Such is a likely case for gold this week. U.S. economic data due for release Friday includes the Advanced Economic Indicators Report, personal income outlays, and the Chicago ISM Business Survey, and the University of Michigan Consumer Sentiment Survey. So you can see gold and silver at this very, very weird level. So let's jump into it. Technically, the gold bulls have the firm overall near-term technical advantage, a 3.5-month-old price uptrend is still on the daily bar chart. Bulls' next upside price objective is to produce a close in April futures above solid resistance at this week's high of $1,691. Bears' next near-term downside price objective is pushing futures prices below solid technical support at $1,600. First resistance is seen at $1,630 and then at $1,640. First support is seen at the overnight low of $1,619 and then $1,610. So, coronavirus gold market meltdown. Jim Rogers says keep your money here, or safe here. Markets are free falling. Coronavirus fears are escalating. Where should investors go? And he's talking about gold. And right now is a great time to buy gold, which is definitely true. Gold is the safe haven. It's down right now, so you have an opportunity. Same with silver. You have an opportunity to definitely get some, you get some cheap silver in return when markets recover, which they will. Everyone always gets panicky around these times. They will. Even though we're seeing $16.50 silver, does not mean it cannot go right back up, especially since the highs were so high just a couple of days ago. Silver with a several week high and gold with 7-year high. Just don't forget that silver was already up to $18.80 a couple days ago. So when it crashes this hard, there's a lot of support and a lot of people are willing to buy back up, especially right now as prices get lower. We could see a lot of people buying it. So March silver futures bears have gained the overall near-term advantage amid this week's steep downdraft. Silver bulls' next upside price objective is closing prices above solid technical resistance at $18 an ounce. The next downside price breakout objective for bears is closing prices below solid support at the December low of $16.56. First resistance is seen at $17.25 and then at $17.50. Next support is seen at $16.75 and then $16.56. So a lot is happening. Whether it's Trump wanting us to a weaker dollar, the coronavirus, also called COVID-19, slowing economic growth down by drastic amounts. Right here, oil shipments to China and the Middle East are down 88% from last February's deliveries. So this is affecting everyone, because China, who imports and exports everything, one of the largest in the world, they can't get their stuff out, their goods out to people, to the other countries, and vice versa. So this is really slowing down everything, and it's definitely going to have some kickback. And I think we're finally seeing the kickback when they're talking about the U.S. or the what was it, the market, or the U.S. Treasury market, is telling traders and investors this week a serious economic damage will be inflicted. So they're going to be talking about helping out the economy, and that's definitely going to, even if it does scare people. It's right here. The major central banks of the world issue a joint statement declaring they stand ready to stimulate economies by easing their monetary policies. So even if that is good news, it still could come full circle, and a lot of people could take that as a threat, even though it is good, because they're going to be kind of helping people out. Since this has been such a drastic dollar loss, almost like a dollar crash, but it's still interesting how perspective can change markets as well. But anyways, I'm going to wrap this video up here. Make sure to smash the like button. Make sure to check out this article if you want to keep reading on. Also on the side, Kitco has some stuff from their Twitter. I also recommend staying up to date. It's a minute-to-minute, update about what's happening with these markets. Also, make sure to subscribe to me, because I do post daily videos, and if you want a daily way on a day-to-day basis to be updated on what's happening in the world of precious metals, I am your guy. Thanks for tuning in, everyone. This was Silver Slayer. I'm going to wrap this video up here. I'm out. Peace.